Hello, and you're welcome to Global Business Insights, where you get more details on key business headlines across the globe. Services PMI in Germany increased to 54.2 points in May from 53.2 in April of 2024. Meanwhile, Eurozone services PMI was largely unchanged, but the composite index was up 52.2 in May from 51.7. More evidence of a recovery in sight. We got earlier China's Services Purchasing Managers Index up from 52.5 in April to 54.0 in May, also beating expectations of 52.6. The rise in new orders showed up a consumption-led economic recovery in the second quarter, as we saw the composite PMI, which includes both manufacturing and services, spiking up to 55.6 from 53.6 in April, also marking the quickest expansion since December 2020. Later, we'll bring you other PMI data from the US in the later episode, which comes out in the afternoon. Politics begins to weigh more on sentiment as South Africa, India elections also concluded, both with previous dominant parties losing their majority, and the TV debate in the UK is also beginning, and it's still not clear how much the anti-incumbency wave driven by citizen dissatisfaction will spread to hurt Biden. Most economies are not growing as fast as they need to, and voters will be noticing. In the US, the Labor Department's job openings and labor turnover survey showed that job openings are down to their lowest level since February 2021. Employment vacancies slipped to 8.06 million for the month. This was down by nearly 19% lower than a year ago. Less vacancies and labor market slack could mean less pressure on wage growth and inflation, but also may suggest the economy is diving south. US indexes were choppy, closing the day flat to slightly higher as the S&P 500 and the Nasdaq also flat, digested weak labor reports, and they are looking to other jobs data later in the week. Dow was up 0.36%, the S&P 500 added 0.15%, while the Nasdaq added just 0.17% at close. In the US, the market seems to be searching for a catalyst as Wall Street focuses on May non-farm payrolls out on Friday. Investors want a labor market that is weak enough to allow the central bank to cut rates, but not so weak that it spurs worry over a potential recession, the so-called Goldilocks scenario. Others say we are approaching a situation where what looks bad may actually be bad. Today, the ADP releases the May estimate for private payrolls, estimated to be coming in at 175,000 for May, down from 192,000 in April. More employment data, this time on jobless claims, will be out tomorrow, while on Friday, the May non-farm payrolls is expected to show growth of 190,000, slightly higher than for April. Intel agreed to sell a stake in a plant in Ireland to Apollo Global Management for $11 billion as it brings in more external funding for a massive expansion of its factory network. And still on PMIs, the UK Global Services PMI came in. We saw the headline measure from the survey at 52.9, lower than April's 11-month high of 55, indicating a softer rate of expansion that was also the slowest since November last year. In Germany, we did see the German business activity, that's services, going up to 54.2 in May from 53.2. The improvements in PMI are largely due to easing inflationary pressures, especially midway through the second quarter. In Germany, the rates of increase in both input costs and output prices were reported to be the weakest for 3 years, also driving the upturn in business activity. And of course, that also helps the demand. In Germany, services firms expect business activity to continue rising over the year ahead, with hopes of increased demand for investments and a growing willingness to spend among customers, supported by lower interest rates. We'll see what the ECB does tomorrow. The degree of optimism towards future activity was also the highest in Germany since February 2022. And in the Eurozone, May services PMI broadly unchanged to 53.2 from 53.3. The composite index was slightly higher in May at 52.2 from 51.7. If you look at the composite indexes in Europe, May PMI, Germany was 52.4, a 12-month high. Spain, 56.6, a 14-month high. Composite index for May, Italy, 52.3, a 3-month low, while France, 48.9, a 2-month low. Also in the Eurozone, amid stronger optimism and a sustained uplift in new business, Eurozone companies, they're also raising their employment for a 5th consecutive month. I'd say that we're seeing improvements across the board. Debates help us to understand what politicians have to offer, and Sunak and Starmer in the UK were in the ring yesterday. After the debate, a Snap YouGov poll says 51% of 1,657 viewers felt Rishi Sunak performed better in the debate. The fiscal strain on British citizens in the last few years has taken its toll on voters who patiently bore the burdens, and of course they will be avenged on the 4th of July. Starmer was smart to harp on a difficult period, the culmination of the 14-year track record of the Conservative government, claiming he is the best alternative, but giving very sparse details on what exactly he would do. He plays a Ming-verse strategy, which is cautious and offers little, but admits more windfall taxes could be coming for oil companies, and those who can afford it will be made to contribute more to the fiscal purse. Sunak is as silent and apologetic as he can on the past, vowing to make amends by cutting taxes, but warns of a coming avalanche of new taxes from a new Labour government would make wallets even tighter, adding that wallets now need some relief. A Labour government spells some uncertainty for business, but markets have had a lot of time to prepare for it. There is an interesting bifurcation in US stock markets. Equities that are dependent on interest rate trajectory and need rates to be cut to reduce their cost of borrowing and boost consumer demand, and others, especially in the big tech, artificial intelligence hyped space, that only need to feed a narrative that a most unclear AI-driven advantage will push growth exponentially, irrespective of interest rate moves. Technology is not completely immune from the sluggishness, as personal computer sales are expected to be at best flat, if not lower, in 2024. Consumption appetite in China continues to cool. Most smaller companies who need to borrow money cheaply to boost revenue are in the first category. Cooling demand is increasingly reflected in the US Institute of Supply Management manufacturing data we got on Monday. The Atlanta Fed's GDP Now model, their latest real GDP growth puts it at 1.8% in the second quarter, down from the 2.7% forecasted just last week. The concern for many is that chances of an unexpected economic slowdown seem to be rising, meaning a material correction in stocks could be looming. Still, latest data on chances of a September rate cut in the US was just over 50% on Monday. In Europe, the big economic question is if the ECB will cut interest rates or not. While most economists still foresee this week's initial move, some argue that sticky inflation, rapid wage growth, and more robust Eurozone output will constrain further monetary loosening. And we are seeing a dialing back of rate cut expectations. Indeed, inflation picked up to 2.6% last month from 2.4% in April, which was more than expected. And extended divergence with the Federal Reserve that has signaled that US rates may have to stay higher for longer to ensure inflation returns to 2% could be an issue, and it could weigh on the euro and could stoke new price pressures. It will also be interesting to see if the Canadian Central Bank cuts rates later today. In the UK, the political transition may complicate the decision for the Bank of England, preferring to wait to understand what the new government direction and implications could be. And in Nigeria, labor unions suspended their general strike that affected the Nigerian Exchange Limited, financial institutions, schools and public offices, as well as airports and the national power grid. The view of EVI is that the first priority of any decent employer is to be fair to its people, protecting them as affordably as possible from inflation. Nigeria could be able to fund a higher wage bill from drastic cuts in other governance costs, as analysts still point out that despite progress in many reform fronts, fiscal discipline is a red flag for the current government. Labour suspended the strike, but only for a week or so to enable government to make a better offer. However, Labour has also hinted that after agreeing the minimum wage, they will return to the reversal of hikes of electricity tariffs. So it's not yet Uhuru. A group of Democratic U.S. House lawmakers have asked the Justice Department to look into allegations of antitrust behavior among U.S. oil producers and OPEC. 9 House of Reps Democrats, in a letter to Attorney General Merrick Garland, cited a complaint by the FTC, Federal Trade Commission, last May, alleging the former CEO of Pioneer Resources engaged in a scheme to coordinate pricing between U.S. oil companies and foreign producers. Brent crude struggling now under $78 a barrel as traders digested weak U.S. data, and OPEC members agreed last weekend to extend most cuts, while 8 members also agreed to gradually unwind some voluntary cuts. Oil prices definitely having a rough week. Relative calm resuming in the Middle East, and geopolitical risk premium may be evaporating. The conclusion has to be that cooling aggregate demand globally is going to be weighing on energy prices at the same time in which oil producers are under fiscal pressures to produce as much as they can get away with. Asian markets closed mixed, with Indian equities recovering from some of yesterday's market turmoil, while Japan sold off. India's benchmark Nifty 50 was up 2.3%, following a sharp sell-off yesterday as it became clear that Modi's BJP party was falling short of a majority. Well, that's it from me on Global Business Insights. This is Bode Oshasami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please continue to send comments. Thank you very much for watching. Bye-bye.